Shalom. First and foremost, I'd like to give all praises and glory and honor to Yahweh, Bahashem, Yahweh Shai, Bahashem, Makar Double honors to the elders for preaching the word truthfully and sincerely. And shalom to the Akim, scattered through the four corners of the globe, preaching the word truthfully and sincerely as well too. And I say shalom to you Akim out there. And this is a sit-down lesson, and this was recently from CNBC.com in the category of the market exchange of business as well too. And this was updated Thursday, February 16th, 2023, 4:18 p.m. Eastern Standard Time. This was published by Carmen Renke and Sarah Min from CNBC.com. And it reads, the stocks closed lower, down sheds negative 400 points, or negative 416 points in that range, after another hot inflation report raises rate hike fears. And it says the stocks fell after another hot inflation report and a declining in jobs claims shows the economy is holding up, amending the Federal Reserve rate hikes. The Dow Jones Industrial Average sheds a negative 431 points, or 1.26, to close all 33,696.85 points. The S&P 500 dipped 1.38% to 4,090.41, and the NASDAQ composite fell 1.78% to close 11,855.83 points. Microsoft and Disney contributed the most. Dow's declined 2.66 and 3.12 respectively, and Tesla sheds 5.69% following a vehicle recall on a driver software. I believe they had recalled a lot of Tesla vehicles, and that's the spirit. I was scrolling through that article and I seen that as well too, in regards to the Tesla recall of the vehicles. I believe it's some type of software driver, something like that. I just want to add a note to that. It says, following a vehicle recall waiting on the S&P 500, and the stock slipped after a January producer price index, another inflation measure, rose to 0.7% on the month per Thursday's report, while the economic survey by the Dow Jones expecting a 0.4 increase. Initial jobs claims unexpected fell for the week ending February 11th per a Labor Department report. The new data comes after January's consumer index and its retail sales report were both higher than expected, suggesting that the Feds may have to further to go in its efforts to tame the inflation. Both inflation readings this week points to the stickiness of inflation, and the fight isn't over, especially when considering today's PPE reading was the highest month-over-month increase since early summer. Mike Longard, head of the model portfolio construction at Morgan Stanley, Longard added that declining jobless claims suggest the labor market remains tight. Slovakia. It says it shouldn't be a surprise to see the markets take a break at hopes of a dovish Fed in the coming months fade. He said, bottom line is investors should recognize inflation may not return to normal levels as quick as many hope, and with that comes more volatility. Comments from the St. Louis Federal Reserve President James Brown said that he advocated for a 50 base point interest rate hike at the last meeting could see one in March. Also wait on the equities. Cleveland Fed President Loretta Mister also said she supports a larger hike. The Dow Jones is on track to end week lower for the third consecutive week, and the S&P 500 is flat on the week, and the Nasdaq is poised to gain slightly. Investors will continue to watch companies' earnings for signs about the strength of the consumer. Dropbox, DoorDash, and DraftKings are all scheduled to report Thursday after the bell, which was like about an hour ago. So as you see it, while the inflation reports of January been reported, and then you have once again a rate hike increase from the Federal Reserve. From the Feds, which that represents the stocks exchange, the inflation, as they continue to contain that. But you still have more increasing fears of inflation going to increase, and along with the interest rates as well too, as the Federals of the Wall Street continues that. As you see, the Dow Jones and the Nasdaq Composite and the S&P 500 all crashed today, as along with the Dow Jones fell 431 points, as they have the continual increase of the inflation report came out for January as we into February. And you see, as it says, after another hot inflation report raise rate hikes fears, right, is going to be a continual increase of rate hikes, and the Federal Reserve going to continue to increase the interest rates, along with the inflation going to continue to increase as well too, as the markets react to what's going on, data, statistics, economics, and globally as well too. And with the earnings of these businesses and these companies, which is owned by CEOs and these top companies, if they're going to gain any strength in the market or it's going to decline. So the stocks react to what's going on with the categories that I just named. But as of right now, as of today of February 16, 2023, on this Thursday, as you see the Dow Jones crash, S&P 500, along with the Nasdaq Composite, as the report of the inflation hot report came out for the month of January, and as and there's a fear of the Federal Reserve will increase the heights of the interest rates is going to increase more and more and more as they continue to tackle to ease of the inflation. But the inflation is going to constantly consistently continue to goes up, along with the Federal Reserve interest rates as well too, And so with that, hopefully this sit-down lesson was edifying. As of February 16, 2023, from CNBC.com of this news article, as it says, the stocks closer lower than Dow sheds 400 points after another hot inflation report raises rate hike fears. And so with that, I'd like to give all praises and glory and honor to Take Yahweh, Ba'ashem, Yahweh Shai, Ba'ashem, Wakar Kadash. Double honors to the elders for preaching his word truthfully and sincerely. And shalom to the Akim, scattered through the four corners of the globe, preaching the word truthfully and sincerely as well too. And shalom to the Akim, scattered through the four corners of the globe, preaching the word truthfully and sincerely as well too. And until next time, I will say shalom.